What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for Sunday, February 26th, 2023. Pretty exciting weekend for me. I bought my very first ever Fender Stratocaster this weekend. Pretty awesome guitar. I did not do it from profits in the stock market, unfortunately. I'm currently building my personal favorite, best guitar. What do you call it? Guitar. Probably my dream guitar setup. Uh, One of the things, it's a hobby. Anyway, okay. So if this is your first time here, you've been watching this for a while, um, keep in mind that the Russell Journal is a journal and it's meant to function as a report. Basically, consider me a student writing a book report on the stock market daily. Okay, consider it that. I am not here to teach. I'm not here to educate. At the very best, I can say I'm here to entertain. Nothing here is trade advice. Nothing here is advice. It is me trying to get better at doing this that is behind this. And feel free to, as I write these reports or produce these reports, feel free to grade them and leave a grade down in the comment section, A through F. As to the reason you want that. That being said, there is some stuff that is actually kind of cool. I've been talking about that sort of concept of you guys grading my book report. I am a student. Teachers grade reports and they leave notes on reports. This report is equivalent to me being in some type of math class and showing my work, right? Even if I arrive at the right answer, how I get there is important. So, feel free to look through this and do that. That being said, there are two very cool. There are some guys. You guys are not y'all familiar with my friend Nick, who is kind of my trade coach at this point, and you're familiar with him and being active he'll be active in the live chat from time to time, and he'll be active in the comment section. If you are interested in some type of coaching, talk to Nick. He is a professional. He has done this before and has a track record to show this. Anyway, but that all being said, him and another guy have pointed out a couple of things about my reports that seem to be sort of not so great. First of all, there's a concept that I am doing this. I am trading in hindsight. Okay, how we trade this. Some of this I think is a confusion between two things. One, I am the videos here are typically a recap. Sunday is the only really forward looking report that I do, because there is no there's no trading on Sunday. Nothing's happened. It's the weekend. So it is sort of looking forward to try and prepare myself mentally forward. But other than that, Monday through Thursday are typically recap days where I'm talking about recap. And some of the stuff that happens in there is not meant to be hindsight trading. Well, you should have done this and blah, 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 blah. The really only woulda, shoulda, coulda that I have that really matters is I should have stuck to my trade plan, right? I should have stuck to my setup. That's that. The only should have that is acceptable in any regard on this channel is that. But even then, we're trying to make that unacceptable. That's the one thing we never want to say on here, is that I should have stuck to my setup. That is not the thing that I ever want to say, but it's usually the answer. If I put up a bad loss, right, and it's usually because I didn't stick to my setup or I didn't trade my setup. I should have traded my setup. Okay. That being said, the other thing, the comment that has been on my reports that I want to address is that we do not predict the market as traders. I don't want to be predicting the market. So I said we, it's me, myself, and I. You don't want to predict the market. That is something you really are trying not to do. You are simply trying to react to the market, right? And the thing that you're looking for is a hold of support and a rejection of resistance or a breakthrough resistance, right? That's kind of all you're looking for, right? That being said, there is this sort of thing that happens there, and this. I'm going to go into this because this is where I have failed to explain some stuff to my setup. Okay, now the setup is very simple. So if you go here, we're on the daily chart, right? On the daily chart, this is the setup in a nutshell for the execution of the trade. Okay. The execution of the trade on a daily setup, we would look for this is oversold, meaning both lines on the slow stochastic are below 20. Okay. What we are looking for here is these two lines to come above 20 at the point that they do. Okay. Our setup dictates that price will make a move for the closest main moving average. Okay. This is the idea behind our setup. Now, what can happen here, right? Where this falls flat is that we get up here, we don't make it to our closest main moving average. Okay. You get up here, you don't make it. So, like, for example, if this was now, okay, so I say this, okay. We make a slow stochastic comes out from here, it will make a move in the other direction towards the in the upward direction. You're oversold towards the closest main moving average, which case would be you're at the 50 right here. So your closest would be up here at the 20. Okay. So that's where you would, or the 18, 20 or the 18. Now I use the 18 because the guy I learned this from, Ira, uses the 18. It's a little preemptive. It seems to work. Other guys use the 20 or the 21 EMA or some of the other stuff in that, but it's all in that sort of ballpark. So you run towards that sort of direction. All right. Now, so essentially what I would be looking for here is a move for this to give me some sort of confirmation that it's going to move out. Now, what can happen is, let's say this does come out of 20, okay? The next candle starts closing red below the previous candle. This thing can go right back into oversold. My trade doesn't work, okay? So there is a setup where this fails, right? Let's say this comes out hypothetically, and this is not preparation for the week. I'm not saying that's happening tomorrow, right? I'm saying in a hypothetical situation in my setup, slow stochastic comes out of overbought. This candle, the next candle fails to close above the previous candle. This momentum will come back down here. It will stay down here. Okay. So that would give us an indication that our trade failed. It didn't work. Cut the trade. Okay. That's very simple. Now, this can be any time frame, by the way. This can be the 1 minute all the way through the weekly. And let's actually go, because I have a really great example of this on the weekly that I took last week and was very, very successful with, was very, very happy about. So we're on the weekly time frame, and you can see what I said. Now, again, like I said, what will normally happen in this particular setup is that a break of the slow stochastic out of either overbought, which is overbought is the two lines above 80, or oversold, which is the two lines below 20, will result typically in a run to the closest main moving average. Okay. Now, here you have this is the weekly time frame. Okay. Up here you have the 100 week, right? Up here, I believe this is this is the 50 week right here, and this is the 18 week right here. Okay. Now the cool thing here is that you ran up here, you rejected the 100 week moving average. Okay. And this is where I began looking for this move to happen. Is I was looking for, on a weekly time frame, the slow stochastic to come below these two numbers. and that it would run down here to, now I thought it would just be the 50-week. Things have been so bullish lately, but which is a bias that I should not have had. But you can see actually it ran down to the combination of the 18 and 50-week moving averages right there. The cool thing that's crazy here is there is now a fairly cool bullish development on this here chart, in that this 18-week moving average here is getting ready to cross over that 50-week moving average. Okay. This is usually a bullish setup. If this happens, okay, if this happens, now normally what happens, it's really funny because what Ira has taught in his classes and on his YouTube channel is that a bullish crossover, right? You'll hear people talk about a golden cross or a death cross. What Ira typically teaches is that if you get this 18-week average coming over the 50-week moving average, that bullish cross, what will typically happen is you will go back and simply take out the previous high. Now, again, this is something that can happen, and it doesn't have to happen as a result of this. That could be a lot of woo or anything like that. In the end of the day, we need the price action to confirm to us that this move is going to happen, okay? That you're going to get this move back in the upward direction as far as that's concerned, okay? So we need price action to confirm it. Give me 1 second. And we need our setup to confirm it. Now, as of right now, from here, where we were at, we took the trade here, we cut out down here, and then where you are with this in this move down on the weekly time frame is I would be all out. I'm all out. I'm not holding anything. And as a matter of fact, as far as Friday goes, I'm not trading. I'm not trading this. Like what? Okay. The other thing that Ira teaches is the first challenge of a main moving average will often be rejected. Okay. Now, what does this do for us as far as that goes? How do we take something that sort of principle and trade it? Well, if I'm in this swing trade right here, and if I was still in it, I actually got stopped out. Where I would be at here, let's say I'm still in this swing trade and I want to target something down below here, right? Let's go ahead and we'll put on something that will give us an easy target. We're going to put on the Bollinger Bands. Okay. Let's say that I want to target something below these averages, right? Okay. But I'm not sure whether or not to target, what to do, right? I'm not sure whether or not that this is, this is going to do anything. Okay. And I want to make sure, right? Here is where I start tightening up the stops. Okay. In my swing trade. So if you remember from a week ago on Friday, I was short from up here, the 407 mark, looking to target the 400, looking to target the 396, and then the 393 levels below that, right? Now, I stopped out in around 403 of this trade, and that pretty much ended the trade for me. At that point, anything else I did, as far as I was concerned, in a swing trade type setup would actually be chasing this market. And I don't want to do that. I don't want to be chasing. So I stopped out. Hey, we made money. It was really good. I took home $77 on that trade. Fantastic day as far as I'm concerned. Fantastic trade, especially for only having 2 put contracts. Really was happy. Very happy with what it did. Also helped me sort of define some things about setting up my stop losses that I've been struggling to sort of, which I'll go into in a different show when I talk about this. Okay, so going in this, we get this break, we get the run right exactly to where I said. Now, here is where, going back to where this video began, or where I started talking about these guys, sort of saying, hey, are you hindsight trading here? Okay. Anytime I have ever brought this up, my intention is not, I have done hindsight trading, and I have gone and looked back on trade. I should have done this. I wish they did that. Blah, blah, blah. Next time when it does, you don't know that it's going to do the same thing next time. You never do. You never do, right? You never freaking do. This thing could have hooked the gear here at 404, gone back into overbought. It very easily could have done that, right? It would have had to do it on the first day for it to actually happen on Tuesday of last week. But and if you remember the when I set up, right, when I set up the swing trade, I said this is the risk reward scenario, right? You have the 404 mark. You break below 404, and that will bring this slow stochastic out on the weekly. You will open the week below 80. If you open above 404, okay, if we had opened above the price level at 404 on that particular trade, okay, this would have re-embedded. It would have gone back in. Both lines would have gone back over 80 on that day, on Monday, okay? And what would have happened here is you would have gone back over on Monday, and I would have stopped out of that trade for basically the theta loss at that point. I would have lost it was the theta was 15.15. It was 15 cents per share. So I had two contracts, so it would have been a $30 loss to me. Okay. So that was where I was risking $30. I made $77. So that was above a 2-to-1 risk reward setup. Nice as far as I'm concerned. As far as any options trade go, 2-to-1 is always great, right? We want 4-to-1, 3-to-1, 4-to-1, or even, and the big kahuna is at least 10-to-1 if you can find it, if it happens. But those are sort of the sort of inner workings of how you sort of targeting your options. So here you are. Ta-da. Okay. So now going back to what I said again. So there's a couple of things where I've pointed this out before. This is because this is the setup, right? The break of the slow stochastic out, move to the main moving averages, the 18 and this turned into be the 18 combination 18 and 50. Okay. So, and that was it. Now I've talked about this before, and I've gone back and I've tried to point this out, and you can see here where we did it, and you can see here where we came out and you made the move up, right? And then even then, now again, this here, like I said, when you touch this main moving average, right? What I said they usually reject the next candle is usually a rejection candle. There's guys like me who just take profit here. Once you get here, they're taking profit, right? No questions, right? Give me 1 second. I'm my throat is really dry for some reason, so I'm chugging some beverages. Now, okay, so that's one thing. Second thing about my trade setup that I think a lot of people are confused about, and this happens to be with the Bollinger Bands, okay? My trade setup does not use traditional price levels typically for its price targets and things of that nature, okay? My setup uses the averages as price targets, and it uses the Bollinger Bands as price targets, okay? Now, so when I'm talking about what happens in and around the bands, right, around the Bollinger Bands, especially on the larger time frames, like the daily and the weekly and things of that nature, okay? Typically, we're looking to use those as some type of price target, but more than anything, right? More than anything whatsoever at all, okay? And this is the real point of the Bollinger Bands for me and for my setup. The Bollinger Bands tell me what not to do, okay? Okay, and there's a few things about this setup that I have to explain. So we're going to go back to the daily. So you can see here, you are at the lower Bollinger Band. You're not only just at the lower Bollinger Band, you're at the lower Bollinger Band and I believe that's the 200-day moving average right there. Okay. So you have this combination of both of those things. All right. What do we not do here? Well, it's Friday, right? The trend is down. Your bias is short because you're underneath the 18-period moving average, 18-day moving average, but you're against the lower Bollinger Band, and you're getting a green candle there. Okay. What my trade setup tells me here is we do not go short right there. And you can see, even if you close down on the day, if anywhere you put in bought puts in that day, you would have gotten burned. This one little candle, this represents the whole day, and will tell you you more or less would have gotten burned pretty good in that. Part of the reason now, Friday we had PCE inflation data, and I woke up, I looked at the premium to delta ratio on the 0 DTE contracts, and it was rubbish. At the money is up over $2 a contract, and I just shook my head and said nope, and didn't trade. There were some opportunities with inside of that, but the risk reward wasn't there for me. The delta was way low. At the money is at least, it's less than 4-1, right? You're putting up 4 premium for 1 delta, right? So it was like 48 cents was at the money, even on the long side. Let's say you played long, right? 4-1, you're making 48 cents for every dollar move in your favor. Now it's weird because at the money very rarely pays more than 0.5. So what you're looking there is you're looking at 0.5 on the delta, and on your and you're looking at your gamma to be 0.9 or higher, right? None of that was non-existent. The gamma was ridiculously gone. I think it was like 0.4, 0.6 or something like that. There was a couple in there. I didn't take a note of it exactly, but I looked at it, I just said, nope, no, I'm not trading that. And sure enough, it just chopped everybody out that day. And that candle's an indication of that. Okay. So what it's told me not to do is don't go short at the lower Bollinger Band. That's what it told me. It told me don't do that. Okay. Again, up here at the upper Bollinger Band, you get up here into this. Okay. What's the deal? Okay. You're up here at the upper Bollinger Band. Don't go high. Don't go long at 418. And which here's the thing about this, right? Part of the reason this is really important for me is that 2 years ago, I traded what was called momentum, right? A momentum thing. And one of the things that guys trade there is it's called the high of the day breakout. So you reach up here, you hit this 418. There is a lot of momentum traders that come in. Now, they're not trading this on the daily time frame. They're not doing it, okay? There are guys who are waiting, though, for that high of the day and to buy it and see if they can ride momentum all the way through, okay? Now, I used to do this, and it can be a very nasty habit for me. I used to trade high of the day breakouts. You play very tight stops, or if you're doing penny stock trading on high of the day breakouts, not that. I don't want that. If you're trading penny stocks on high of the day breakouts, you got your hotkeys, you're marketing in and out super fast. You are not sitting around hoping for a lot of really crazy stuff, right? You are really looking for the chop in that. Now, because I did that and I did it for 9 months or so, it is ingrained in me to see that and compulsively move towards that direction. And so the Bollinger Bands really on this stop me from doing that. I'm not buying into the high of the day. I'm not buying into the upper Bollinger Band, not going long into that setup. Okay. All right. Now, the next thing that I have failed to talk about as far as this goes, this is just an example here. This is, again, we're not talking about hindsight trading. If you traded this, you did whatever you did, and that doesn't matter. I did not trade this, right? As a matter of fact, I don't even think I traded on this day. Okay. So coming in, we're looking at some stuff that I just want to make these clarifications very clear. Is the Bollinger Bands more or less tell me what not to do. Okay. Now, the one thing about this, okay, here we go. On this daily time frame, you can see we're down here, we're oversold. Okay. Your two, all right. So here we're oversold. Okay. So as an oversold position here, I'm looking to trade counter trend here on oversold as long as this doesn't stay down here longer than 3 trading sessions. Okay. So you're oversold down here into in here, and you're basically 2 days down here. When I am trading in the oversold condition, I am looking for counter trend. Okay. This is where I'm at. From the break here, I'm looking to short into the 18-period moving average. From the break of the 18-period moving average, I'm looking to short into some lower averages or even targeting the lower Bollinger Band. And that, but once you start getting to oversold, this is where I start looking for counter trend. Okay. Unless one thing happens. Okay. If this slow stochastic does 3 days, and this is on the daily time frame. This is not on any other time frame. This is just on the daily time frame. I use this is if this stays under here for 3 trading days. Okay. I don't even do this on the weekly, right? I'm doing this on pretty much solely the daily, and to see it embed in oversold on the daily is pretty rare. But if it's down for 3 days, then this becomes embedded. Okay. At the point that this becomes embedded on the daily time frame, meaning it's both lines are under 20, there I am looking to short. Then I am looking for bounces for which to short into. Okay, this will embed. So the point of my setup is meant to do 2 things. It's meant to take advantage of trends and counter trends, right? But what I haven't been very clear on to this is how this works. When do we trade trend? When do we trade counter trend? Okay. So back in here, when we embed it in here, this pullback up here, you're very good job. And I did trade that. It was very well, right? Here you began, once you finally lost it, you lost oversold. Now I let this one killed me, right? This one irritated the absolute crap out of me because you lost this embedded reading right here. You lost it. And that was a nice move right back to the 18. And that was the day, for some reason, because you actually didn't lose this. You didn't wake up and the embedded reading, or the embedded reading was lost. Okay. That didn't happen, right? This actually happened into the second hour of the market. And so because you hadn't lost it, I was looking for the counter trend, and I literally got smoked into that. And that was where I made that really big, nasty, bad trade. And I thought, well, you're embedded. You're embedded. They should be coming in to buy it. You're embedded. This blah, 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 blah. I did not check back and realize that this can adjust partially through the day. I didn't know that it would do that. So not only did I lose like a shitload of money that day, because I'm just thinking, and stuff. Now right here, this is hindsight. This is hindsight trading. But it is a bit educational. I did not know it could do that. So we looked and we did it. And that, and it helps. Okay. Make sure to check on this daily time frame, whatever it's doing. Okay. So going through this, going back in through this, those are the big things, right? Those are the big things I want to make very clear is that, on my, and I'm not, again, if we wake up tomorrow and this is still down here, right? If we don't get a gap up tomorrow, then we will be looking for short positions. Okay. We will be attempting to trade counter trend. Okay. Or trading with the trend. We won't be trading counter trend at this point. Okay. Especially because this is going to give us an opportunity. If it does come down here tomorrow, it is going to give us an opportunity for that to move to the right of the Bollinger Band, which should give us some space. As far as this, the work between price action and the slow stochastic goes, that should do it. Now, this is not predictive. Either does or it doesn't fucking do it. Okay. It gaps up tomorrow, we will come out of oversold. It's seriously, if that happens, you come out of oversold, we can target that 18 period moving average on the daily. If you don't open higher tomorrow, you open flat or below, that's going to leave this down here, and we can look for those counter trends to happen in order to get short from those short opportunities. Again, targeting lower Bollinger Band, and eventually at some even targeting this, which is the 100-week moving average, 100-day moving average down here. Okay, so that's kind of how I look at it, right? Again, I'm using this slow stochastic to determine what its position in overbought, oversold is going to be, where I decide whether I'm trading trend or counter trend on the daily. This becomes more or less kind of the anchor chart for this. Okay, so again, 3 days in, if you spend 3 days down here, it embeds the momentum in the downward direction. Okay, if that happens, okay, we can then look for those to trade with the trend in their direction down. And one of the things I can show you on here is where we get this embedded reading and how it sort of works. Okay. Let me see if I can find a good spot. There we go. There you go, into the lower Bollinger Band. So like here is a good example of this. Let's go back into here. Okay, so you get, let me see if I can find a really good example of this. I haven't traded any of this much in the last, I've kind of screwed this up over the last year, and this is kind of how I'm working it. So here you come into, let's see, let's get the good correlation down. There you go. So here you get into here, you're down 3 days in a row, and you just cling to this Bollinger Band and keep plummeting down, right? And here, you know, and again, so anywhere that like the candle gets up there, you can short into that and get a move back into this lower Bollinger Band. And it just embeds, right? The stochastic holds down here, and you can catch these moves. Down. Maybe I won't. I'll try and find some better examples of how this works as I go through the week. I will come back. We'll revisit the embedded sort of thing. And especially because you're trading on shorter time frames, you will be looking for shorts. So again, like I said, we open higher tomorrow, bring this slow stochastic out of overbought. You can counter trend all the way back into the 18-period moving average. You don't open higher, right? You open in around here. This embeds. You can look for short positions in the downward direction. You can target the lower Bollinger Band and even the 100-day moving average. And that's kind of how I look at the trade setup, okay? If this opens down here, it stays down here, we're embedded, okay? At the point that we embed, we dictate that logic would dictate basically that below here, you've got targets of the lower Bollinger Band and this 100-day moving average. The other thing about this here is where we prove ourselves wrong on a day trade is a break above this 200 period average or the top of this little green candle right here. A break above that dictates that we're wrong and we would be able to stop out for that trade. Again, that's just governing this off of the daily. It's kind of an example. This is not my trade plan for tomorrow. Just so you know, this is sort of how it would work. Okay. You would target, you would look for a high spot in order to short. As long as you stay below the top of this candle right here, you would definitely be able to take that short trade and stay there, assuming this does not come out of oversold early tomorrow morning. And if it does come out of oversold, I would much rather it come out of oversold. Ultimately, like this sort of playing the embedded side, Ira does that, and he's got a really good system for doing it. I haven't really successfully navigated a lot of that yet, not entirely based on this or based on the daily time frame. But what I have done is usually this pop when we come out of there. That's where the good money is at, and that's where the easiest money is at. This side gets really scary, really choppy, and that's where they talk about the volatility. So again, this is not trading stuff. This is just kind of how I'm looking at it, how I'm using my trade setup. Let's see. Let's go to the 2 hour. This is one I really like to show you guys, is that like right here where this is one, again, go back to my last trade on Thursday, looked for this move to come out here and boom, right to the 18. And then this is exactly what I talk about where I say the main moving averages typically reject, right? So you reject below this, you rejected this 18 on the 2 hour. This is the 2 hour time frame. That was good money. That was really good money. I did really well in that setup. I really liked that. So it's kind of the same thing going into Friday. And this was Friday. This was most of Friday's trading sessions right through here. And again, you can see, look at how tight that little stupid range is. And again, another reason why I didn't trade is like, golly, and that probably means you are losing momentum. Anyway, so that is it. That's basically how this whole thing works. I want to see if anybody's here. Okay, so he asked about, sorry, Nick, I have been just kind of on a rant here and I've got the full screen up, so I didn't see the comment section. So Nick is asking about Ira Epstein. Ira Epstein is not an investor. He is a trader, 100% a trader. He trades futures and he swing trades, okay? My setup is you should go watch Ira Epstein, and Nick, I will even tell you should take his Bollinger Band class. It's like $90. You should take that class. It is really cool. He will show you some stuff that will like melt your brain. He's been doing this shit since 1969. He is very, and like he knows, like he's friends with John Bollinger. So he's very well, he had a show on CNN. Like the guy's not an idiot. I knew it. He said, I told him to go take the class. He said, not a chance. So you go fuck yourself, Russell. Okay, so my setup is based off of what Ira teaches. And it does pair very well with my style. Where I had the most success was Yeah. So again, fantastic. You do you, brother. That's fine. My setup is based off of what Ira teaches, and part of it is because where I had the most success in trading ever was I traded what was called the VWAP reclaim, and I used a combination of the 3 EMA, VWAP, and the RSI, and I had a lot of success. I went from $500 to $12,000, and it paired with what was called the Heikin-Ashi method for taking profit. And basically, you use previous candle to move your stop loss. And basically, what you're looking for in that setup is sort of like you're looking to target VWAP. That's sort of your pan ultimate usually in that setup. But what you're also looking for there is because usually the run's already happened. So it's you're scalping, your counter trend scalping more or less bounces, and you're just using the previous candle highs to move your stop loss to. And I had a lot of success with that, and it made a lot of sense. It felt really good. And so when I started understanding what this is, the difference in slow stochastic, it was a nice variation between that. So it worked really well for me. It does though. So Nick says he doesn't think it transfers very well to the daily charts. So all right, here's the deal. If you're day trading, like if you're on like any stock, right? If you're on like, if you're trading Tesla or Apple or Amazon, it doesn't typically work. It works here on like SPY, QQQ, because these tend to follow the futures markets, right? SPY is typically a derivative of futures in a lot of ways because it's kind of the cash equivalent of that. So Iris strategy works over here fairly well. Now it's really good. It's really good risk reward happens on longer time frames, like anything above like the 10-minute time frame, 10-minute to 2 hour. If you're day trading, like you can make some real money there, and I've had success with it in those time frames. Below that, it does get a little choppier, a little trickier. So no shit. Be tough. It may well work, but be careful. Yeah, we all. That's no, really. Yeah, absolutely. Be careful. If in there, what was it? We used to say, hurry up and do a good job. Yeah, no, I look, anything can blow up in your face. As you know, we're all these strategies are only ever as good as our ability to stick to them, right? And that is hands down, that's it. It works really well on the daily, and it works really, really well in the futures. There are some areas. So let me go back to this day right here, because I'll show you something. This is really messed up. This has really killed me. Okay, go on the daily time frame. So I'm on the daily time frame, and we're into this, and I'll show you right here. So this big red candle, we get a little bounce into this candle, and I look for this short right into the end of the day, and you can see part of the reason I'm cool with the short is because you're not quite at the lower Bollinger Band. So I'm targeting this lower Bollinger Band. The one thing that really messed me up was, especially on my trade setup here, was that on SPX did hit its lower Bollinger Band that day, and it stopped. It found support into the end of the day and kind of flattened out. And here I was looking for it to follow through to that, but because SPX had already stopped at its lower Bollinger Band, I didn't get the rest of that move. So I took like it was like a $150 loss on that one trade there. So yes, it's really funny when you're when you're deriving stuff. Sort of. Yes, it can. Right. And that's where, like, one of the things about this show today, I really wanted to reiterate again, on a daily time frame, this isn't embedded. I can trade counter trend. That's how I want to do it. Right. I'm looking for those counter trend setups. And you can go back to where I placed that one on Wednesday that worked, or Thursday, that worked really great for me. It was a great trade setup, oversold, looking for the counter trend back in the other direction, worked really, really well. At the point this spends 3 days on the daily down there for my setup, and I'm not telling you how to trade. I wouldn't dream of that. I would not. But what I'm saying here is that we have that embedded reading down there. So now I'm looking to go back to trading trend with the trend. And like I said, tomorrow that's going to give me the bias. And no matter what, it's the same thing you talk about, where price has to prove to me what the trade will be. That's what I'm hoping for. That's why I'm trying to be that guy that, okay, you're going to trade counter trend, but you're grinding in one direction all day. Set your fucking stop loss and respect it, right? And that's where I would be with that. And just so you know, this is stuff that has been part of my setup. And I cannot tell you why I have not explained um explain this, other than maybe I'm just a little bit more focused on just the triggers. This is stuff, this is not new information for this setup. This has all been part of it. It's just stuff I haven't talked about, you know. And there is some stuff in here. So like once this embeds, there is a way on the 15-minute chart that you actually short this based on what Ira teaches, but it is in his class. He charges for that class. It's kind of proprietary to him. And if he ever sees one of these videos, I don't want him to be like, that asshole's giving away my stuff. I really don't want to be that guy. I would not risk pissing him off. So some of that stuff I actually can't, I feel like I shouldn't or can't say it here as to actually how, once this embeds on the daily, how to short this, or how he teaches to short it. Because that one piece of information is pretty much the value to his class, and I don't want to be the guy that takes money out of somebody else's pocket. So yeah, well, as far as the derivatives go, my stop loss is my stop loss. And you know, I've been going back over the weekend, this weekend and last weekend, and really sort of testing, looking like back testing and reviewing a lot of my trades as far as that goes. And basically all you want to do with that is you know, especially 0 DTE, stick to that 1 minute is what I'm seeing. I'll have the exact numbers for you guys tomorrow as to like what the odds favor, or what, you know, what the edge is on this. But basically just setting your stop loss below as at your derivative in what I trade, which is the option. It makes higher highs and higher lows, or it makes, well, it doesn't matter whether you're playing puts or calls, right? You're looking for the price action to become bullish in whether you're buying puts or calls. So you're looking for a trend of higher highs and higher lows. And the best way to trade it that I can see is that you're trading, once you get your entry, all you can do is set your stop loss one tick below the previous low. And if it takes it out, it takes it out. And so far, the math is favoring that overall you will do better. Like 8 out of 10 of those will do better than if you right. And so like I'm kind of getting my stop loss figured out entirely. That's what seems to work best as far as that goes. Yeah, good to see you, Nick. Thanks for coming in. I want to say hi to Patrick. Yeah. So Patrick commented about being prepared. So just everybody say goodbye to Nick. Thanks for showing up, Nick. I'm glad you were here. So Nick has been really working with me a lot on this, into really focusing on your trade setup, knowing your trade setup, and sticking to that setup. Okay. My setup is a very interesting one because there are caveats to it. And I think anybody, you know, I think any setup is the setup. If you're trading breakouts, if you're trading support and resistance, you know, you've got your setup, but I think there's caveats to that. If you go back to this and you're simply saying, well, I'm going to long support and short resistance all the time, right? You miss a lot of chances to play breakouts, right? You miss a lot of opportunities, right? But if your setup has a caveat to say, okay, well, you know, we long support and short resistance, but so you're either taking profit at resistance, right? Buying at support and taking profit at resistance. You probably should have some caveats of like, hey, if it breaks to this next level, we can then target that next level, right? In the idea of letting your winners run. Now, I'm not teaching support and resistance trading here, right? I'm just saying that my setup's not the only one that has caveats, right? So in being prepared, this is some stuff that I haven't really talked about. It's stuff that and I don't know why I haven't said it. And so it does seem like over the last couple of weeks, I look back at the videos and it seems like, why is he hindsight trading? Why is he predicting the market? It's really not. It's a question of this happens or that happens, right? Support holds. If you go to support holds, and you can target the upper band or the next to resistance, or resistance, or it breaks, right? Support holds or breaks. If you watch Corey on the stocks channel, he's basically going to tell you break below 393, which is a key support, by the way, especially given the fact that stupid average is right in there. Break below that, and you can target the next one down, right? The next average down. So, being prepared for this and mentally preparing for sticking to the setup, right? And this is something Nick has taught me. He taught me, and it's something I'm working on, is trying to be emotionally prepared before you're in the trade, right? One of my biggest problems in trading, I can say, isn't that I haven't prepared. Once I'm in the trade, now I'm trying to manage my emotions. Stupid. Absolutely stupid, right? You shouldn't be having to manage. There should be no management of anything. You take the trade and it's 100% execution at that point, right? You've defined your risk. You've defined your entry. You've defined your profit. You're not managing emotions. You're not managing the trade. The trade is either happening or it's not, and I lose. So anyway, that is trading. Is once you're in that trade, you're not trying to figure things out once you're in the trade. You're in the trade and it's 100% execution. All the preparation should happen before the trade. And the one thing I'm hoping, and I wish Nick was still here, he's took off. The one thing I'm hoping with this sort of kind of concept is that after the trade is over, I'm not trying to recover feeling bad for doing something wrong inside of the trade because I executed the plan, right? So that's, and the thing that I should feel good about to become a professional trader is that I'm just executing a plan, because that's all professional traders do. They have a plan, they execute, it works, it doesn't work. The plan had a contingency for if it didn't work, and it has a response for when it does work. And so hopefully that's mentally the preparation all happens before. There shouldn't be a recovery period. The trade didn't work. And if you didn't respect your risk when the trade didn't work, then that's the when you wind up with the recovery, where you wind up feeling bad about a trade. Last week was overall a losing week for me. Had some good days, had some bad days, slight green, red down. But I had no recovery this weekend. I went and bought a new fender, beautiful blue, midnight blue. Oh my God, it's gorgeous. Sounds great, amazing. But I didn't have to feel bad this weekend or hate myself, because this whole week I more or less stuck to the trade plan. Even the one trade I had back here where I'm targeting that and SPX kind of screwed me. Yeah, I didn't know SPX was at its lower Bollinger Band. But even then, I was able to respect my risk on that. When it didn't work, it didn't work. I figure out why later. That doesn't matter. Why doesn't really matter. When it doesn't work, your trade plan just executes, right? It's because, and a lot of that is because I cannot know all the reasons why, right? I mean, this thing could go, listen, you could wake up tomorrow and Russia starts pulling troops back and doesn't say a word. Well, some asshole with a lot of money, right, has a satellite feed of Russia and he starts pushing the price way up. Well, I'm short because my stochastic says you play the short side if it's embedded, right? It embeds, right? This is just a hypothetical. This guy's got a satellite feed of Russian troops. He's got $1 billion, and he's like, oh, that's going to be good. And he starts pushing stuff up. I won't find out till 4 o'clock in the afternoon that Russia's decided to quit the war. Now, none of that is true. None of the things I'm saying there are true, right? The thing is, I'm probably not going to know that. I go back 2 years ago. There was a day where I was short. Everything was going. I had momentum in my favor. I had everything in my favor, and the agriculture department comes out and drops the price of corn. Okay, this is before we get these inflation numbers. And what had happened is the traders saw the drop in price of corn and said, oh, inflation's not going to be a thing because corn futures are falling. And they rode this thing. We were in at 427. We're targeting like 421. This is back when we were started back in around the 450s and stuff. And they pushed this thing in the end of the day, last hour, $13. It went all the way from like 427 all the way to 440. And I legitimately got trounced. I had no idea what had happened. And it happened so fast. I was so red, and I'm deep in this thing, right? I'm I think at the time I was like 20 contracts deep. I had no idea what I was doing, by the way. I still had, I know what I'm doing. I just know I'm not good at doing it yet. That's the difference between now and then. Is I have my setup. I do my setup. I just sometimes for some reason don't respect my setup. That's the trick here is now. So anyway, so that had happened. I didn't have a setup. I was just kind of doing what everybody else was doing at the time. And I just got smoked on that trade. And yeah, so it was and so like the thing is the reason I bring that up is because the setup is because I'm in the market 2 years. I have no idea that I should watch corn futures. I have no clue. And you know why they watch the corn futures? To dictate a lot of stuff with inflation? It's because we use corn to make ethanol, to make things like diesel fuel and stuff like that, like biofuels, okay? And the thing is, if corn comes down, that fuel price is going to come down. And guess what they use to make corn? They use tractors, which use biofuels to make food, which means the price of food should be coming down, right? So I didn't know any of that. But if I had had a trade setup that had defined risk and defined reward parameters, I would have either known to get out of the trade or even to switch long. So, but I didn't have that. And now the thing is, you can't know all the reasons. You're not going to know them, right? Tomorrow, President Xi could get up and fart and it smelled like roses. And so everybody decides that China's opening up and we're going to go bananas. You going to fucking know that President Xi's farts smell like tomorrow? You're not. It's not good. You can follow the news cycle all day long. By the time they know about it, this chart's already made its move, right? And so, like, the thing is that's why this is what it is. That's why it's doing what it's doing and why your setup is your setup. And I'm saying this in report form. This is if you're taking this as some sort of guru type teaching, I'm not doing that. So what I am saying is a lot of this is for me. And to be honest with you, next week I will go back, I will review these videos, and I'm going to look at them and go like, geez, that guy on YouTube there, that Russ, he's really smart. He's right. Anyway, this has been a long video. I'm not going to look at futures. I'm not going to look at the news. We're going to break away from that sort of stuff on this channel, worrying about that. We will talk about some of the economic stuff because I find it interesting. But overall, it's not a matter of like, as far as becoming a professional trader, the thing I'm beginning to realize that none of that matters, right? The only thing that matters, you trade technicals. So anyway, that's going to do it for me for the Russell Journal. Russell Journal is written, edited, hosted by me, Russell Liss. This is not trading advice. This is not, this is nothing more than a student writing a book report. Feel free in the comment section to grade my book report. Okay, that's what this is. If you think I'm crazy, go ahead. Give me a C for crazy. Anyway, until tomorrow, though. Oh, okay. So I got to go through the rigmarole, right? Russell Journal, written, edited, hosted by me, Russell Liss. We are produced by Social Media Shows. Our executive producer is Maria Pereza. And until tomorrow, just pretend I said some sort of catchphrase.
This show is brought to you by Michelle Kubiak with Berkshire Hathaway Home Services. If you're looking to buy or sell a home, call Michelle at 702-683-6576. Her license number is S.48606. This show is also brought to you by Hand and Stone Massage and Facial Spa, located on Silverado Ranch, here in Henderson, Nevada. Restore, relax, and refresh. Let's not forget our very own Meryl and Merrick comedy show. This fun, comical TV sitcom duo with Social Media Shows Network loves to make you laugh. Mahel Empire Productions. It's a filmmaker based in Las Vegas, Nevada. Founded by Michael and Sonny Mahal, and are dedicated to making feature films. Turn your power on with Broken Bulb Productions. Owned by Russell Rapp, an independent filmmaker based out of New Jersey. This show is brought to you by, let's not forget, our very own GI Connections. It's a non-profit organization that connects veterans with resources. We're also proud to recognize Prolific Arts with Sonia Scott. Painting is the expression of emotion and feeling deep within one's heart. Let's not forget Matoma Environmental Technologies. Global research, development, and manufacturing of innovative photocatalytic products. Our show is also brought to you by Carmelo Rodriguez, who is the author of a best-selling book called Smile. It's based on true events. It's the story of a couple building a family. Get your copy of his book at Amazon today. We also love our musicians. Think about Frank's Tribute, an all-star band. It's a Green Bay-based band with Let Me Be Frank's Productions, family owned by Frank Hermans, who happens to be a veteran entertainer.
Welcome to Social Media Shows. Have you been watching social media shows recently? Of course you have. We have been live streaming for 4 years across social media platforms. We produce over 70 shows with over 1,000 episodes. In the process, we've helped over 100 creators realize their dreams and start their own show. We give platforms to promote your business. If you are an artist, if you have an event, if you are entrepreneurs, or if you have a story. If you haven't done it yet, go ahead and subscribe and follow us on major social media platforms. And if you have a great idea of a show, join us. Social media shows can help you produce and live stream your own show. Let us help you make your dream become a reality.
Hello everyone, this is Joseph Skoda with Social Media Shows. Well, I thank all of you for your support through these last several years, and it's been a lot of fun. We've given people a voice they never had before. Now, Social Media Shows is always collaborating with our veterans to help them do things and help out the veterans who are struggling today. And we teamed up with GI Connections, connecting veterans with resources. So please consider helping and donating to this great cause, because we're always doing things for veterans. So GI Connections, Social Media Shows, and you is what makes the world a better place. Once again, Joseph Skoda, proud United States Air Force veteran.